Have you ever noticed something strange about the US dollar? Every time Democrats are in power, the dollar seems to rise. And when Republicans take over, it often falls. Coincidence? Or is there actually a hidden pattern nobody talks about? In trading, the most dangerous thing you can do is believe a pattern without understanding why it exists. But when we look at the dollar since 2000, the pattern looks almost impossible to ignore. So let's look at the facts. Under George W. Bush, the dollar declined sharply. And when we check the dollar under Barack Obama, the dollar rose. And when we check the Trump's first term, we will see that the dollar weakened again. And under Joe Biden, the dollar surged strongly. So at first glance, it looks simple. Democrats, stronger dollar, and Republicans, weaker dollar. And even if we go back to the 90s, one of the strongest dollar rallies in modern history happened under Bill Clinton. At the point, the question becomes obvious. Is the political party actually controlling the dollar? Is the political party really the reason? The short answer is no, the dollar doesn't move simply because of Democrats or Republicans. What actually drives the dollar is many important things, like the interest rates, whether they are high or low, and the inflation. The inflation is having a really important relation with interest rates, because if we have higher inflation, that encourages the interest rates to go higher. And the opposite, if the inflation goes low, then the interest rates are encouraged to go lower. And we have the Federal Reserve policy, which policy is the Federal Reserve Bank is following at the time. Also the economic cycle. And here is what most people are missing. Every president entered the office during completely different economic conditions. Bush, for example, entered during the collapse of the tech bubble. Obama came after the 2008 financial crisis. Trump faced the COVID-19 pandemic. And Biden governed during aggressive interest rate hikes. So the market environment mattered for more than political labels. So the important thing here is each president came in a different time with different circumstances. That's why one of the biggest mistakes traders make is trading headlines instead of understanding the macroeconomics. Because a political pattern might work once or twice, but eventually the market changes. So the real rule is simple. When interest rates rise, the dollar usually strengthens. When the dollar often weakens, the liquidity floods into the market. That is the real game here behind currency movements. Also, the market sentiment is a key factor here. So we have four important factors, not just politics. So relying on the political party is dangerous. So yes, there is a visible pattern between political parties and the dollar, but it's not a fixed law here. The dollar follows money flow, interest rates, and economic cycles, not political colors. So if you want to understand the market, you need to focus on the money, not on politics. Focus exactly where the money is going. Based on what you saw in this video, write in the comments your prediction regarding the performance of the US dollar during Trump's second term. Do you think it will go up or go down? Let me know in the comments. If you like the video, please like and share it so more people can benefit from the information. And if you like the channel, please subscribe and turn on the bell so you don't miss anything new. Have a wonderful day and catching up with you in another video.